Welcome back to the Stock Estate, everyone, where we learn how to swing trade with risk management. And in today's video, I'm just going to go over last week's picks, which is my top 3 swing trade stocks for last week and how they go, and as well as give you my top 3 swing trade stocks for this coming week. And without further ado, let's jump straight into the updates. So, the updates, right? Okay, last week's picks was relatively quite simple and it was one of my favorite plays, the trending plays, okay? And the first stock we're going to talk about is actually SGMS. SGMS is Scientific Games Corporation. And last week, I kind of pointed out that, in the midst of this kind of market downturn or this volatility sake, I saw a trend within the gaming industry that says that it is pretty resilient right now, okay? And it has been following a nice trending play, as you can see right now over here in the charts, right? Even though the market was tanking, and some stocks, right, was like, for example, you can see like companies like Blink, like all those EV charging companies, okay, all of them have taken massive hits right here, okay? As you can see right here, right, from Yahoo Finance, okay, I use Yahoo Finance for for my technical analysis, which I think is a free tool, that is available to everyone, and I think all of you can follow this and learn how to use Yahoo Finance, because I do think that it's a pretty good free tool for anyone to use. But basically, you can see, right, for charging companies that have absurd valuations, huge valuations, right? Although it's justified because their growth in the future years are massive, but okay, those companies are the one that got hit the massive, and their graphs, most of them look something like this, right? Okay, where it goes up a lot, then it crashed all the way down here. Okay, but meanwhile, okay, the gaming industry was pretty insulated, I would say. So last week, right, I pointed out, okay, if you want a safer play, more comfortable play, right, I pointed out a few companies like SGMS. Okay, swing over here, okay, you will actually have bought in over here if you have followed my my thesis. Okay, so if you have bought in the area of value over here, you have swing up to the further upside to $50, and pretty sure it did. Okay, swing it up here, and you should have taken your profits by now. Okay, and wait for it to come back down to the moving average again before swinging it up to the upside. So this was a pretty good from $44 to $50, a good 11-12% swing trade. So it's pretty good for the week. Okay. Good money. All right, next stock we're going to talk about, it was EVRI, okay, Every. Okay, EVRI, right, I pointed out when it was all the way here, right, and it was kind of scary because, in a sense, okay, this was what I drew last week, right? Okay, if you didn't watch my last week's video, you're new here, okay, I do this kind of top 3 swing trade stocks video every single week, and last week, okay, I pointed out, this is just one of my drawings that I like to illustrate, to show my viewers, what it might look like, the price might look like, and sure enough, it was a little bit scary because it followed exactly where I thought it would. Okay, so again, the area of value I pointed out last week was around here, was around $13.89, 87 cents, and throughout the entire week it was super volatile. A lot of days where it closed up and down, but the most important part or lesson that you can learn here, right, okay, is to always set your profit taking target. So again, as I said, you'll probably reach a resistance over here and get rejected around the $15.72 line or around here. Okay, do not always set the highs over here, because again, the top of the resistance, right, is a touch point where most of the touch points have been touched. Okay, sounds a little bit confusing. Okay, let me explain to you right now. Okay, so again, you see, where is the resistance? The resistance should be probably around here. Okay, the $15.50 level. Because why? Because it had touched 1 point. Okay, 1 point last time here. Okay, 2 point, 3 point, 4 point, 5 point, 6 point. So you can see that it is all the way around here. But again, it is an area of resistance. So again, do not set a too high level where you want to profit take. Leave some crumbs for the other market makers to take a little bit. But basically, right, okay, if you did buy an area of value over here, okay, you have been profit taken around the $15.78 level, around there. Again, a good 10% swing trade itself. So pretty decent right there. Okay, and again, you can see that the lesson here is that if you didn't set a profit taking target, right, okay, and let the algorithms do its work, right, to sell at $16 level, you didn't set the order in, right, and you wanted to manually do it, right, sometimes you might have just missed it, right, and it just closed back down all the way to $14.86, and you wasted the trade. Okay, so remember to again always craft your exit strategy. Okay, follow my trade plan, which you can see in many of my old videos. Okay, that's very important as well. So okay, next talk we're going to talk about is IGT. Okay, IGT, again, similar thing that have been done. Okay, again, I pointed it out when it was around here. Let me just draw it out. Okay, it was around here. The lower levels are around here. Okay, but so the next day, okay, it closed again. A few more days was in the red, right? So again, if you again this kind of place, you gotta be a little bit more patient. Okay, set your stop losses a little bit lower. I set your stop loss a little bit lower below the lows, right? Maybe around $15. Give it some space. Okay, so if you did set your stop loss with some space, right, you won't get stopped out too easily. Okay, and it didn't go down that much. Okay, because if it broken down too much, you have actually been a very bearish kind of pattern. So it didn't. Okay, so again, if you bought in at around $16.47, okay, it did broke up to the highs. You should have profit taken around $19.22. Around there from $16 to $19, again, it's around 10+% of a profits for last month. Okay, for a quick swing trade of a week, 10% is really pretty good. Okay, and yeah, so the three trades all went out pretty fine last week. Again, according to plan. Okay, and three trades, if you choose any one of them, right, you have been a winning trade as long as you did your due diligence, you did your entry point properly, you did your trade plan properly, all will be good. Okay, so again, as I said, my job here is I like to give you the place. I like to explain to you why, my thought process, my trade plan itself. How do you actually craft your trade plan using astute methods such as setting stop losses, getting your profit levels. But it's your job to choose out of the three, okay, one or two that you feel that has more potential to play, and craft your own exit strategy according to your own risk profile. Because as I said, okay, last week was everything worked out fine, but not always all the trades will be good as well. So it's up to you to choose the right ones. So now let's update for the last week's video. Okay, it's all done. Okay, and let's go on to this week's video. Okay, let's go on to this week's video. Wow, it's already March. And the time really flies, right? Okay, so let's hope that this bull run will continue, from March onwards all the way to April, where they say that April is historically a pretty good month. So let's hope that it stays true to that history. So first thing I'm going to talk about is actually KRIK. Oops, I mean KRK. Okay, KIRK, Kirkland's. Okay, Kirkland's is a retail chain company. Okay, and currently, right? Okay, again, this is a trending play. Okay, and you can see this many times, right? Okay, very similar to all these other companies that I've been playing. Okay, EVRI. Okay, all these other companies, since it's been swinging up, okay, you probably take maybe 2 or 3 or 4 days before it to come back down to the area of value before you want to swing up again. So, but Kirkland right now is at an area of value. Okay, as you can see, trending plays, right? They tend to respect a certain moving average, which we can see over here. It's the what? It is the 50 moving average around here. The 50 moving average is the one that has been respecting pretty heavily throughout the entire season. And right now, right, it has been coming over here. Let's zoom in a little bit more, right? Okay, it's been sitting right at the 50 moving average for quite some time. Okay, just hovering around there. Okay, so if you can see right here, okay, there is a nice little. Let me just draw this line over here because this was the serious support or resistance, right? Okay, so why am I choosing, this? Why doesn't it look bearish to me? Okay, so again, if right, it consolidates near the bottom, and what do I mean by the bottom? Okay, let's draw an imaginary line over here, right? Okay, so you look all the way in here, right? Okay, so you can see that this line is slowly, gradually going upwards, okay, following the trend. But however, if it's consolidating near the lows, right? Okay, near the lows over here, okay, not going upwards, right? All in the lows over here. Actually, it might be actually a bearish move because that means there's a lot of selling pressure around here, right? And it might actually break to the downside, maybe back to the 100 moving average. But let me clear the drawings. Okay, but it didn't. Okay, what you can see right here, right, is a as you can see, it's a line upwards. Okay, it's following the 20 moving average very well. So again, it's just consolidating right for a break up to the further upside. And why do I like about this? Again, is because there was a sell-off, okay, all the way with the overall markets, okay, and all the way down here, right? And again, it's just been consolidating right here, this line, okay, waiting to break it up to the further upside. And there's also some fundamental news that I feel that is pretty interesting as well. Okay, so Kirkland just had some earnings. Okay, the Kirkland's earnings, right, is as a retail decor store, right? It has pretty good, I won't say awesome results, but I would say that I'm very impressed, by their leadership. Okay, because you can see that, okay, firstly, right, their e-commerce increase, was driven by the third-party dropship revenue up 111%, and their own products is shipped directly to their customers up 45%. Okay, both were offset by the in-store fulfilled channels. Okay, and they are incorporating e-commerce inside their companies. Okay, and they have started opening up their stores as the virus has started to come down a little bit. And what I like is, during the quarter, right, they closed 8 stores, okay, resulting in a count of 373 stores. Okay, during 2020, they opened no new stores and closed 59 underperforming stores. Okay, this, although it might seem like, their business are bad, right, they're closing down stores, they're gonna go under. Yes, in a sense, if you think it that way, it can be a bad news. But in my perspective, I feel that they are doing well because they are actually cutting losses. They are understanding that it's not just about keeping the bad apples afloat. Okay, they're trying to cut off all the bad stuff. Okay, and keep those that are running. Okay, and improving their profit margins, improving their long-term profits. And you can see that their gross profit was 37.7% sales compared to 29% the previous year. Okay, so you can see that they are actually improving their sales year over year. So right now, right, the market haven't really priced in this year. So I can see quite decent things going on along for this company in the future. And again, this is it's a under $1 billion market cap company. So it's a very, very small company. But however, I do feel that there's good things coming along for this company. So again, but we are going to do this for a swing trade, right? So again, it's a quite an easy trade right here. Okay, first thing we're going to look at the long-term trend. The long-term trend is still an upward trend. Okay, and again, as I can see a shift from the tech, the growth companies, all the way funds start pouring into the value companies, right? Okay, so these kind of value companies or the traditional retail companies, I see for the short term wise, right, they will gain some traction here and there as the entire market looks to shift and broaden out their funds somewhere else. So Kirkland might be a good benefactor of this entire trade itself. So again, right, let's take a look. Okay, again, the area of value is where, okay, again, is near the 20 moving average, somewhere around here. Okay, anywhere within the 20 moving average is pretty awesome. And let's bring out my doodle. Okay, you can set a stop loss a little bit below the lows over here. Okay, up to your own sensitivity. Okay, you can set it to ATR, average true range. You can set it below the previous lows or the last candle here as well. Okay, so up to you whether you want to get stopped out or not. Okay, so even if you get stopped out early, right, sometimes, okay, example, if the market makes a violent swing, right, boom, okay, goes through like this, right, then you get stopped out, right, okay, then it's okay. Wait for the market to come back to you, right, then you can buy back in again. Doesn't mean that you get stopped out, you cannot get back in again, right? Doesn't make sense. So yeah, as long as it goes back to the area of value, it's okay missing that few cents of, in a sense, profits, okay, because it's better to set a reasonable stop loss than some stop loss that's too tight or too loose that doesn't make sense there until you get stopped out all the way. Then you're just letting the market makers eat your money, right? So don't be that fool. So after setting a stop loss, okay, again, you need to craft your exit strategy, okay? And the exit strategy will be where's a reasonable area to take your profits from, okay? Although you say, right, okay, hey man, should we take the profits around, the top level over here? Okay, you see these two level, right? $32, okay, from all the way from 23 to 32. Wow, $10 difference, that's like 34% increase, right? Okay, but man, don't be greedy, okay? Don't be a greedy guy, okay? Because you see these two, right? Okay, you see these 2 points are out of the Bollinger Band, firstly. It's out of the Bollinger Band. So most of the time, very unlikely that you push out of the Bollinger Band. Only a few times that it actually happened. And also secondly, right, if you look at the entire chart itself, okay, these 2 points are anomaly. So a more reasonable area is to bring it down over here, okay, down a little bit where there's more touch points. Okay, touch once, twice, thrice, 4, 5 times. So a more reasonable area will be around, okay, $29, okay, to profit take. So again, it is a pretty decent profit take around this entire area. So if you look at this, right, it is a pretty decent risk to reward, okay, ratio. This is the profit. This is the risk. Okay, so this is a pretty decent trade by itself. So first stock, KIRK. So second stock I'm going to talk about is actually a beverage company. Okay, and this company has been pretty interesting, and it has a lot of hype, during the entire super bull phase of the entire stock market, right, before the crash itself. And it did crash along with the overall markets because its valuation got a little bit extended. Yes, it got a little bit extended for a beverage company, but however, okay, this company, right, is none other than FIZZ or FIZZ, National Beverage Corporation. But I would say that its recent earnings was very good. Okay, you can see over here the news, right? Okay, National Beverage earnings surpassed estimates, right? And they continue its healthy performance, reports best ever winter quarter. Okay, they have done a lot of good things that has been, driving their business forward. So I can see that this company, right, has good solid fundamentals, bring itself forward. Okay, so you can see its old charts, right, from it's a trending move. Again, you can see it's the same trending move, trending, up, down, respecting the 50 moving average. Then suddenly it skyrocketed like no mother's business, right, all the way from here, right, from $47 around there, skyrocketed to up to $98, which is 100% increase. And this company, mind you, is not a small company. It's around a $10 billion market cap company. So it's a decent sized, mid-sized company. Okay, it's not a small company that can, not small penny stocks that can pump. Okay, this company is a big company. It got pumped up so hard. Okay, and again, the higher the pump, the harder they fall. They did fall all the way back to their area of value. So if you did look at the area of value over here, you'd be like, that's pretty delicious, right? You can actually look to enter over here. So again, this is a trending move that is now respecting the 100 moving average over here. And again, recently it has got beaten down a little bit yesterday, 7.98%. Okay, the reason might be some overall sentiment or some shift over to the technical side. But overall, that's a good thing because it reduces your risk. Because the lower price that you get in, the lower risk you are exposed to. Does it make sense? Makes sense, right? So right here, right, same thing for FIZZ, okay, Fizz company. Okay, again, this is more of a traditional kind of company, more of they selling the beverages. Okay, this company, as I said, they will also benefit, from the shift from growth to value itself. So again, a nice little area to buy in, right, will be around this area. Okay, maybe the $48 to the area value be $48 to $40.56 around there. Okay, so if you feel when market opens, right, you just rocket up higher, right? You don't want to wait for it to retract all the way down here, right? Okay, you can always get a bit. So this is called, I said buy a little and add more. Okay, so to add a position, so you can buy a little bit. Actually, honestly, at these prices, looks pretty good as well at $50.71. Okay, add a little bit. Okay, so it falls more, you add heavy when it goes into the area of value a little bit more closer. And once you get it right, okay, again, you have to find an entry point. So again, the trigger to enter is up to you. Okay, you can choose to add a little bit of money. Then after that, when it goes to the area of value, add more. Okay, when you can see there's a bullish pattern coming up, okay, and you can actually add more to your positions. But where will be a decent area to take profits? Okay, so you can see, right, the previous resistance over here for this company is here. Let me just draw it out for you. Okay, again, you can see there's kind of like a heavy resistance, right, over at this area, which is around $58. Okay, so again, you can swing it, right? Swing it from right here around $50. Okay, $50 area to around $58. Okay, for a decent, around 10% profits. Okay, 10 to 12% profits. Okay, pretty decent. Okay, you can choose to take profits around here, and if it consolidates near the top over here, right, which is something around like this. If it consolidates near the top over here, okay, you might want to play a breakout, to its further upside to around $75 and above, and then you can set a trailing stop loss to stop yourself out, okay, just in case anything happens. Okay, so second company, pretty safe company as well to play with. Okay, again, National Beverage Corporation. Okay, third stock I want to talk about is actually RMO. Okay, Romeo Power Solutions. Okay, Romeo Power. Okay, Romeo Power is a battery company, and when the market crashed itself, I won't say crash, okay, correction, okay, but all these speculative plays, as I said before last time, will get hit the most, right? This speculative plays got hit pretty hard, okay, from its highs of $40, right? It has gone all the way as low as $8. Oh my god, that was below its pre-spec price, which is around $10, right? So anything you scoop below, $10 was actually a steal. Okay, if you scoop some shares at $8, right, and it's at $13 now, you have been a good 40% increase. Okay, but basically, okay, way oversold, very way too oversold in my opinion. Okay, and let me explain a little bit more about why am I choosing this company again. So firstly, RMO, right? If you look at its valuations, right? Okay, again, its valuations is not cheap. Okay, its price of sales and everything is not cheap. Okay, so again, this is not really a longer term company for me. Because a longer term company for me, I must have super high conviction. But however, I would say this is a pretty good candidate for swing trade given the EV hype. And after EV has been beaten down so much, I can see some funds going back into EV as all the EV companies start releasing back good news. That might attract investors' attention back to the EV sector. So RMO, right? RMO, what do I like about RMO? Okay, again, you can see that there's going to be a strong resistance, right? Or resistance level, right, over here. Let me just draw a straight line over here. Okay, this was if you are a technical analyst, right, you will have known that this is a head and shoulders pattern, a very standard head and shoulders pattern, and you can see very strong resistance they're going to hit a strong resistance around here. So again, what do I like about this? Because there is some space, right, from here to $13, right, all the way to $18. There is a good space, right, from here to here for its further upside. Okay, all the way from $13 to $18. Okay, justifying that. And I can see, okay, from $13, right, it's downside all the way to the pre-IPO or the pre-spec price, right, of $10, right. I don't see it going below $10 anytime soon unless the entire market starts correcting again. Then I can see it going down. But if the market is going up, I don't see it going back to $10. So again, $13, $3 downside to a potential $5 upside there. So there's around 1 to 2, 1 to 1.8 risk to reward ratio. Do you think it's attractive? Okay, for me, it's okay. It's okay. That doesn't have to be perfect, but it's not bad. But however, if you zoom back down into the 1 hour time frame, right? As I said again, zooming to the 1 hour time frame, what you have to do is you want to take a sneak peek or a snapshot, right, at a closer into the details, right? And that's what we can do to set a tighter stop loss, okay, and a better risk to reward ratio. So what can we see right now here, right? Okay, we can see that this is actually a trend reversal again. Okay, trend reversal means, right, it has been dying for quite some time, okay? But however, right recently it has climbed back up a little bit more, okay? Again, up, consolidate. Because what I love about this, right, is that it consolidates, right, in a straight line over here. It refuses to sell off anymore. So you can see it reaches the bottom once, okay, make it a higher high. Here there's still some sell off, but right here, right, it remains a straight line. Okay, what I mean, let me draw it out for you, right? Okay, it remained like a straight line, okay, even going up a little bit more, straight line and even going up a little bit more. This is a pattern that I personally use, okay, which I don't see a lot of people using, but this is a tip that I actually use a lot myself. And this is actually, this kind of pattern, right, where it's straight line and a little bit upwards, right, really shows that there's a lot of buying pressure coming in. The next day, most of the time, if the market is green, it will gap up as well. So we can see down, gapping up, down, gap up. Okay, so again, I can see this coming through again and again, and it's pretty similar, right? As I said, right, it's pretty similar to some other companies that have actually traded over the week as swing trades as well, which I'll show to you a little bit more later. But you can see this resistance level over here, right? This straight line over here. Okay, you can see this. There's a nice little resistance level, but however, it's consolidating right near the top and it's willing to break out again. So when it break out, right, I can see easily going to $18 all the way here. Very easy trade itself. I feel like there's a lot of hype going here. And to set a stop loss, right, around here, right, you can set it below the lowest previous swing low over here, which is around around $10. Okay, a little bit tighter will be around $11. Okay, to improve your risk to reward ratio a little bit more. Okay. And again, if it's around $2, right, then your risk reward ratio will be 1 to 2, 1 to 3, around there. Pretty good swing trade for me, in my opinion, overall. Okay, and why do I like this compared to other charging station companies like Blink and everything? Because if you look at Blink, right, this is a chart of Blink. Okay, BLNK. Okay, if you look at the 1 hour chart, right, it's not as clean. Okay, I won't say it's as clean because you can see, right. I hope you learned a lot out of this because I do try to throw in a few more examples, right, to help you understand a little bit better. But you can see it get down a little bit more, right, and it didn't really consolidate near the top, just like that. Okay, so a better line, right, I will see it consolidate around like up, consolidate near the top here, waiting for it to break to the further upside. But however, it closed down here, right, and it gap down a little bit up, and goes down a little bit more, okay, in the 1 hour time frame. So it's not as clean as Romeo Power. So again, I can see there's still a bit more of a bearish sentiment in Blink charging station, and this company does have 30% short float around there last time I checked. So I can see the bears shorting it back down. Okay, I can say shorting, the short ratio has been always a good thing because everybody's saying, oh no, there's a short squeeze, right? But shorting, right, that means people are shorting this company. So there's a lot of selling pressure, easily shorting it back down again. So unless there's a good news that actually forced them to cover, this company will actually suffer a bigger hit compared to other companies that have a lower short float itself. So that's why I choose Romeo Power instead. And for a swing trade that I did last week, that swing trade was actually Unity or U. Unity is a company that I really am interested in. I'm thinking of putting it a little bit more in my long-term investment because I feel like it's Shopify in the longer days in terms of its business model, its revenue, where it has super high gross margins. But however, what I don't like about this company is trading a little bit at its premium. Okay, it is around $27 price to sales ratio, a little bit more expensive. But after the entire correction, right? Let's take a look, right? Its entire corrections from its all-time highs of like $150 back to $100, it seems a little bit more attractive to me. Okay, but let's zoom in and let me quantify what's my example, right? Why did I swing this company? This is the 1 hour time frame. Okay, so when it shows signs of a reversal upwards, right? This is Unity itself, okay? It starts showing some signs of reversal around here, okay? It consolidated near the top, right? And there was this huge dip somehow during the day, but it dipped back up again. Okay, I actually entered around this area, okay, which is around 80. I entered around $98, the lows of this area, and it swung it up to the further upside to $107, where I took profits because that was the next, what? That was the next resistance line, okay? So you can see, always draw your support resistance and set your profit taking, okay? So around here, right, this was a heavy, you know, let's see, right, this was a heavy resistance line over here. Again, once it hits here again, it got rejected down back here, but it's slowly climbing back up again to the further upside to $107 of Unity. So again, you want to see a consolidation, right, touching near the top, okay? But this little random, this is just an anomaly. I would say it's an anomaly to, it got rejected, then it came up again. Okay, so again, it was a pretty clean chart, right, when I was looking at it, okay, before this area, right, I was looking at it here, pretty clean chart. Okay, I did trade this as a swing trade. So that's the criteria for me for playing this kind of overreaction play. And if I see a straight line refusing to push it back down, right, that's often a very bullish sign for me for a trend reversal play. Alright, so that's it for today's video, everyone. Okay, I hope you guys enjoyed this, again, my top 3 swing trade stocks video. Okay, I hope you smash the thumbs up button. Okay, show me some support. Okay, I really appreciate all my commenters who, you know, in a sense, cheer me on the comment section. Okay, appreciate me for what I do, because it actually really helps me, you know, and touch me, you know, to create this kind of content for all of you, you know. And by doing that, I hope you guys gain a lot of value, okay? Lose less money, earn more money, and I shall see you guys in the next video. Stock stay down.